Hey everyone, welcome back to Corporate Decoder. Today, Eightco Holdings Incorporated just filed their quarterly report, and right now it looks like they are placing a massive bet on digital assets and artificial intelligence. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report shows a huge shift in their strategy with massive investments in things like Worldcoin and OpenAI, while their older business seems to be fading. Alright, let's dive into Eightco Holdings Incorporated's latest quarterly report. This is basically a financial checkup for the 3 months ending the 31st of March 2026. At the very top, we see the company's name, Eightco Holdings Inc., and their stock ticker is ORBS. They are a Texas-based company, and this report covers the first quarter of 2026. It is interesting because they've changed their state of incorporation to Texas recently, moving from Delaware. Now, let's look at the balance sheet. This is like a snapshot of what the company owns and owes. The most striking number here is digital assets at fair value, which is a massive $175,309,890 as of the 31st of March, 2026. That is a huge portion of their total assets, which stand at over $340 million. What this really means is they have put a ton of money into digital currencies like Worldcoin, Ethereum, and Stablecoins. This is a massive change from just a year ago. Their cash and cash equivalents has dropped significantly from over $58 million at the end of 2025 to just about $7.5 million by the end of March 2026. This big drop is because they're actively deploying that cash into these new strategic areas. They also have short-term investments of about $32.5 million, mostly in government securities and mutual funds. This is a new category for them, indicating they are diversifying their liquid holdings. Total liabilities are around $18.3 million, which is pretty manageable compared to their total assets. The key here is additional paid in capital, which jumped from about $606 million to over $772 million. This shows they've raised a lot of new money, likely to fund these massive digital asset and investment strategies. Moving on to the income statement, this tells us how the company is performing financially. For the first 3 months of 2026, they reported revenues of about $7.5 million. This is down from about $9.9 million in the same period last year. This shows their old business, which is Inventory Solutions, is seeing a revenue decline. Their cost of revenues also went down, which makes sense as their sales are down. But the big story here is gross profit, which fell from over $800,000 last year to just about $215,000 this year. That is a sharp drop. Then we look at operating expenses, and wow, selling general and administrative expenses exploded from $2.2 million to over $10.7 million. This massive increase is due to higher professional fees, advisory costs related to their digital asset strategy, more compensation, and tech costs for overseeing these new digital assets. This combination of lower revenues and much higher operating costs led to a huge operating loss of over $10.5 million for the quarter. Last year, it was around $1.4 million. But the real shocker is change in fair value of digital assets. For the first 3 months of 2026, they had a loss of almost $66.5 million. This is because the value of their digital assets like Worldcoin went down significantly during that period since they adopted a new accounting rule where these digital assets are valued at market price. Their profits and losses are now directly tied to the ups and downs of the crypto market. This is a huge driver of volatility. All of this sums up to a massive net loss of over $76 million for the quarter. That is a huge jump from a loss of about $2.5 million in the same period last year. Let's look at the equity statement. This shows how the owner's stake in the company changes. As of the 31st of March 2026, they have over 368 million shares of common stock issued and outstanding. This is a big increase from around 205 million shares at the end of 2025. This growth in shares is mainly from issuing new stock, likely through their ATM program, which we'll touch on later. You can see here issuance of common stock ATM, which means they sold shares directly into the market. They issued over 160 million new shares in this quarter, bringing in a lot of capital. And again, you see the net loss for the 3 months ended the 31st of March 2026, directly impacting their retained earnings, pushing them further into negative territory. Now, the cash flow statement, this is crucial because it shows the actual movement of cash in and out of the business. Net income loss starts us off, showing that big loss of over $76 million. Then they adjust for non-cash items. The biggest one is the change in fair value of digital assets, which is a positive adjustment to cash flow because it represents a paper loss, not an actual cash outflow of $66.5 million. Share-based compensation, which is also non-cash, adds another $5.1 million. Despite those adjustments, the company still used $4.7 million in cash from its operating activities. This means their core business, even with the digital asset accounting, is burning through cash. Under cash flows from investing activities, we see a massive purchases of digital assets of over $65 million and purchases of short-term investments of over $225 million. This is where all that raised capital is going. They are aggressively buying digital assets and other short-term investments. Their net cash used in investing activities for the quarter was a staggering $209 million. This shows a massive deployment of capital. On the financing side, net proceeds from issuance of common stock is a huge positive number, over $165 million. This is from selling their stock, likely through that ATM program we saw earlier. This influx of cash is what is funding those massive investment purchases. Now for the notes, which give us more detail. Note 1 explains their business. They used to be involved in several areas like inventory solutions, packaging, and Web3 operations. But now, they've exited most of those. Forever 8 is their core revenue, generating business, providing inventory funding for e-commerce. The big change is their digital asset treasury strategy approved in September 2025. They are now holding digital assets like Worldcoin, Ethereum, and Stablecoins for treasury and investment purposes. This is a key strategic shift. They adopted a new accounting standard, ASU 2023-08, which means they measure these digital assets at their current market value, and any changes in value directly impact their reported earnings. This explains why their earnings are so volatile. On top of digital assets, they are also making strategic equity investments in private companies. Their focus is on areas like blockchain, digital identity, and AI. This is where the OpenAI and Beast Industries investments come in. Here is the breakdown of their digital assets. As of the 31st of March 2026, they hold over 277 million Worldcoin tokens, more than 11,000 Ethereum, and 75 million in stablecoins. The total value is that $175 million we saw earlier. The total digital assets at fair value is clearly stated here again. This table shows the cost basis versus the fair value for Worldcoin. Their cost basis is over $320 million, but the fair value is only $76 million. That is a massive unrealized loss of nearly $244 million. For Ethereum, they are actually up a little. This highlights how much their financial results are tied to the price performance of Worldcoin. Given their massive holdings, any significant drop in Worldcoin's price will dramatically impact their reported earnings and balance sheet. This note details their strategic investments in private companies. They've put almost $1 million into Mythical Games, then nearly $18 million into Beast Industries, and a huge $92.6 million into an indirect investment in OpenAI. These are very concentrated bets. This is where they are really betting on future growth areas like AI and digital identity. Their investment in OpenAI is through a special investment vehicle. It is a massive chunk of their assets, showing they are serious about AI. Property and equipment net is almost zero. This indicates they are not a traditional asset-heavy business anymore, which makes sense given their shift. Intangible assets like customer relationships and developed technology are now listed as zero. This is because they took an impairment charge, meaning they basically wrote off the value of these assets. This likely happened as they exited older business lines. This section details their stock activity. They've authorized a massive 10 billion shares of common stock, now up from 500 million. The issuance of common stock ATM shows they sold over 160 million shares in this quarter. This is a common strategy for companies that need cash and are willing to dilute existing shareholders. They also have a lot of outstanding warrants and stock options. These are essentially promises to issue stock in the future, which could lead to more dilution. This table breaks down their share-based compensation. It is quite substantial, showing a lot of equity is being used to compensate employees and advisors. They used to have two business segments, but after selling the packaging business, they now operate as one. This single segment is Forever 8, their original revenue generating business. However, their digital asset activities and strategic investments are not considered separate segments because the CEO reviews them as part of overall corporate treasury management. They are essentially treating these as corporate assets rather than a distinct business line. This section covers things that happened after the 31st of March 2026. They continued issuing stock through their ATM program, raising another $19.4 million. They also amended their consulting agreement with Worldcoin Tower LLC. The new fee structure is a flat 1% of assets under management, which could mean significant cash outflows if their digital asset holdings grow. This is where management explains what is going on. They directly state their mission is to build an authentication and trust layer for the post-AGI world, which sounds very forward-looking. They reconfirm that Forever 8 is their only revenue-generating business, but it is highly concentrated with one customer making up a huge chunk of their revenue. This is a significant risk. They really emphasize their DAT strategy, holding digital assets as a long-term reserve. They believe digital assets can be stores of value and want exposure to emerging decentralized technologies. This is a bold and risky strategy. They highlight using their ATM program to fund this strategy, which is how they raised the money. They reiterate that the new accounting rule means their earnings will be more volatile due to digital asset market movements. They admit their revenues are down because they are exiting certain operations and winding down customer relationships where they were operating storefronts to cut losses. This is a strategy to stop bleeding cash from their older business. The big jump in SG&A is explained by costs for their new strategies, including custodial fees and compliance costs for digital assets. This is where they acknowledge the significant losses from digital asset price drops. They wrap up by saying their net loss is huge, largely driven by these digital asset fair value changes and increased SG&A. Here is the crucial part: liquidity. As of the 31st of March 2026, they have about $7.5 million in cash, plus $32.5 million in short-term investments, and importantly, $75.5 million in stablecoins. Stablecoins are digital dollars, so these are very close to cash. In total, they have about $115.6 million in what they call near cash liquidity. They see their stablecoins as a direct source of liquidity. They confirm their digital asset holdings are mostly Worldcoin, Ethereum, and stablecoins. Their significant investments in OpenAI and Beast Industries are also mentioned here. They really hammer home the point about digital asset volatility. The $66.5 million loss in the quarter shows this. While their near cash liquidity is strong, the value of their other digital assets like Worldcoin could drop significantly, impacting their total available funds. As a smaller reporting company, they don't have to give super detailed market risk disclosures. They say there have been no material changes to their market risk profile. This section is about internal controls. They admit their disclosure controls and procedures are not effective. The main reason is a material weakness in our internal control over financial reporting due to limited accounting personnel. This means they struggle with timely financial reporting, segregating duties, and ensuring all transactions are properly reflected. They are trying to fix this by hiring more people and improving processes, but it is still an issue. This is super important because it is where they warn investors about potential problems. This is a huge risk. They've put a massive amount of money into just a few companies like OpenAI and Beast Industries. If any of these bets go bad, it could really hurt them financially. They admit they don't have formal diversification limits, which is concerning. These investments are in private companies, meaning they can't easily sell them. They could be stuck with these investments for a long time, and their value could drop before they can sell. Because they can't easily track the market value of these private investments, they might not realize declines in value until it is too late, leading to big impairment charges later. This is the key takeaway. They have a huge amount of their assets tied up in things that are hard to sell or whose value swings wildly. This could make it tough to fund operations if they need cash quickly, and they may need to raise more money, potentially diluting shareholders further. No unregistered sales happened during this period. This just lists the documents filed with the report. Finally, the signatures of the CEO and CFO confirming the accuracy of the report. So, what is my take on this filing? Eightco Holdings Incorporated is clearly making a massive strategic pivot. They are betting big on digital assets, particularly Worldcoin, and on emerging tech companies like OpenAI. The old business is shrinking, and the new strategy comes with immense risk due to the volatility of digital assets and the illiquidity of private investments. The significant increase in operating expenses and the massive net loss, driven heavily by unrealized losses on their digital assets, are major red flags. Their reliance on ATM offerings for funding also means significant dilution for existing shareholders. The material weakness in internal controls also indicates operational challenges. The risk I am watching is how they will manage the extreme volatility of their digital asset holdings, especially Worldcoin, and whether they can generate actual profits from these speculative bets or if they will burn through their raised capital. My biggest concern is that the massive allocation to digital assets and private companies, while potentially high reward, carries equally high risk, and any significant downturn in these markets could severely impact their financial health. What I am actually looking for is evidence that their core Forever 8 business can stabilize, or their new digital asset strategy can eventually generate consistent returns rather than just mirroring market swings. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take, stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Check out the Discord in the description.